The nation's top miners have held crisis talks over mounting trade tensions with China. And it comes as ship owners hold blacklisted Australian coal off the Chinese coast. Now, some of Australia's biggest producers are threatening legal action over the mounting costs of a ban that has crunched the nation's second biggest export industry. It's time to discuss this and so many other matters with my economics panel. The Herald Sun's business writer, Terry McCrann, is joining me from Melbourne, and the founder of the investment newsletter, The Switzer Report, Peter Switzer, joining me from Sydney. Welcome, gentlemen. Peter, if I may start with you, Beijing has all but formalised the blacklisting of Australian coal. What implications is this going to have for our country?
Well, fortunately, coal's not as significant as iron ore, but it's a kind of implication in terms of our economic growth, the impact on demand that we don't really need at this point in time. I think the bottom line is if they pull this stunt with iron ore, then we would be significantly worried about this tactic they're employing right now. On the other side, you know, we generally spend $69 billion a year as tourists going overseas, as yuppies, you know, going to international countries. So a lot of that money is going to be here. So in a sense, I think there's a buffer for economic growth that would generally, you know, be derived from exports. That means we've got some time to play this battle with China out. But I do believe it's time that other countries actually put their shoulders to the wheel and start having a go at China, because it's us today, but it could be another country tomorrow.
Well, that's quite right. It's a very interesting point too about the domestic improvement in consumption here. But Terry, is there an opportunity for other countries, firstly, to fill the gap in regards to coal? And secondly, China doesn't really have an alternative source or a reliable alternative source of iron ore. And is that why they haven't attached a tariff to Australia's exports there?
I think you put your finger on it exactly, Corey, that iron ore is in fact a weapon that we can use that China can't use because there is no alternative. There was an alternative 5-10 years ago, and that was Brazil's Vale, which was then easily the biggest producer in the world and running very smoothly. But Brazil is now an environmental disaster. There's no way that they can step up and meet any fall off in the sales of Australian iron ore. So there is no way that China's going to play this game with iron ore. I would argue that we should be playing this game with iron ore, that we should be making it very clear to China that we can hurt them just as much as they can hurt us. And what I've suggested is, you know, you can be as subtle or as obvious as you want to be. But let's imagine if the federal government decided that there was a risk of COVID in these iron ore ports, so that they needed to go through a much more rigorous turnaround process. But an iron ore ship comes in, it needs to be inspected, there needs to be a quarantine of the crew for a week, and somehow this leads to delays in shipments. You would see the iron ore price go through the roof, the Chinese would pay the penalty, they are already paying penalty in terms of the price of iron ore, but this would supercharge that. And it would send a very clear message to them that we can mess with you just the way you've been messing with us. It's the only thing we can do it with, which is iron ore, because there is no alternative. Brazil's not an alternative, and there isn't the quality of iron ore and the volume of iron ore anywhere else in the world. And it is so crucial to making everything work in China, iron ore.
Corey, wouldn't you love Terry McCrann to be trade minister? You know, Terry McCrann versus the bad boy banners of Beijing. That'd be terrific, wouldn't it?
Well, I'm always into Mad Max diplomacy. That's been my history. So,
Corey, I would add that I don't see the prospect of being supported by other countries. I mean, they may make gratuitous noises, but at the end of the day, I think as we've seen with trade over the years, every country or every grouping of country plays its own game, and you know, they'll be more likely to pick our pockets than to actually do anything which would hurt them to support us.
Yeah, it's going to be interesting in this conversation. We've talked about Australia's, what it means for Australia, but tomorrow I think we've got the mid-year economic and fiscal outlook that's going to be released by the government. And it's expected to show that Australia's economic position has actually improved in only 10 weeks since the federal budget was handed down. Peter, your assessment of domestic spending and tourism that's not going overseas but will be better here. It's going to show an impact on the budget bottom line. Just where do you expect this to end up tomorrow? Well,
with a question like that, going through, with the most craziest year for economics, I've got to quote John Galbraith, who I interviewed many years ago when the 1987 crash was on. I asked him what he thought was going to happen. He said, "Peter, there are those economists out there who tell you they don't know, and there are those economists who don't know they don't know." And I think the thing is this: what we're definitely seeing, is that our economy is growing very strongly. If you look at, I ran through a whole bunch of data from consumer confidence to business confidence to building approvals and all this stuff, and all of them are either record highs or 30-month highs, and a lot of them are saying that these indicators are better than they were before the coronavirus. So all we know is that this economy is growing faster than was predicted 10 weeks ago, and definitely than 20 or 30 weeks ago. But I think Terry would agree. It's kind of like you're putting your finger up in the air, trying to guess where the wind's going on this one. I just think it's going to be better than the $213 billion budget deficit they talked about. I think it will be less because we're growing better, and our infection success has helped that because the economies are opening up faster than what most economists would have expected.
Yeah, I remember one person once saying to me that an economist, I'd really like a one-handed economist, because they're always saying on one hand there's this and on the other hand there's that. But Terry, you wrote a really interesting piece on the budget forecast saying that never before will it have been as completely irrelevant, meaningless, and just plain wrong. What did you mean by that?
Well, I'm picking up on what Peter said, and I agree absolutely with him that the economy in the September and the December quarters has performed much stronger than Treasury expected. Treasury was expecting flat growth, zero growth. Either, might have been 0.1% one side or 0.1% the other side in the September quarter. It came in at 3.3%. Now, the budget was prepared before they actually got those numbers. And to pick up on Peter's point about, I'm not sure whether Treasury collectively are the economists that don't know, or they are the economists that don't know they don't know. Because what we're going to see tomorrow is a budget which tells us that what Treasury produced in October, an update, what Treasury produced in October in the actual budget was completely wrong. Now, Josh Frydenberg has already indicated that when he said the budget papers in October, when we're already into the month of October, said there were going to be 2.2 million people on JobKeeper. But it's turned out there are only 1.5 million people on JobKeeper. That difference alone is enough to put the budget, the deficit, under $200 billion. So although it's very dangerous to make a prediction about a number, whether it's the CPI or a budget number the day before it comes out, I think we're going to see the deficit predicted tomorrow, which will be less than $200 billion. And that's telling us that back in October, Treasury didn't have a clue, as Peter has indicated, how strongly the economy was actually bouncing back in the September quarter, and that continued into the December quarter, so that we will get to Christmas, and in my judgment, we'll be pretty much back to where we were before the virus. We may even be a little bit better than we were before we hit the wall in the June quarter.